Hey everybody, my name is Brandon from thestockstreams.com, and today I want to talk about Tesla stock, ticker symbol TSLA. What I want to do first is I want to go into Google and talk about how Tesla is down almost 16% in just a single week. And then I want to go into the earnings report to talk about how Tesla is doing as a business, and then I want to go into the trading charts to see if there's a level or two to buy Tesla if we want to buy Tesla. So now let's get started. So here we are in Google, and here's a 5-day look at Tesla's chart here. And as you can see, in about a week, we lost over 14% plus another 2% in the after hours off of Tesla's market cap. So I don't really think a lot of Tesla's sell-off had to do with the company in general, but instead has to do with the macro picture. If we scroll down here, we see a lot of news talking about the current market sell-off that we are seeing in the past couple days. If we take a look at the NASDAQ, we lost about 6% of the overall index in about a week. That is a huge move for an index with over 100 stocks. So the real question is, why did stocks like Tesla sell off? Well, if we poke around in the news here, we see a lot of people talking about interest rates. Because interest rates are basically a measure of how expensive it is to borrow money, for companies that have high growth prospects but need to borrow money right now to invest in their growth, the money that they are borrowing is more expensive, which thereby hurts their growth prospects. This hurting of growth prospects is likely why we are seeing the NASDAQ, which holds a lot of high growth names like Tesla or Zoom, drop when people begin waking up to the fact that interest rates are accelerating upwards. This theory is supported by the fact that after the Federal Reserve Chair, Jerome Powell, came on to testify to Congress on Tuesday that they see interest rates staying low, the market sharply recovered and bounced from the lows of the session. We see this little dip here on Tuesday. If I scroll back up, guess when Jerome Powell came on TV and said that they saw interest rates staying low. We see that once he said it around here, the stock rebounded and a lot of the NASDAQ rebounded as well. So big picture here, the stock market went down because interest rates went up. But Jerome Powell, who really has the power to control interest rates, said that he sees interest rates staying low. So does that mean that the correction is over? For me, the answer is a firm maybe. We see that Tesla really rebounded off the $650 bottom here with conviction. However, it may have not just been because of Jerome Powell's comments. We also see that Ark Invest's Cathie Wood bought shares on huge volume right at Tesla's 100-day moving average. And guess where that 100-day moving average is? Right around here. So Cathie Wood and her Ark Invest really put a floor on the Tesla stock by buying the dip, at least for now. Also, by disclosing her position publicly, it probably gave retail investors the confidence to buy the dip on that day, and as well as the Wednesday, where we saw an 8% rise in the stock. This gets me to the main point of the video that I want to make here, which is to me that it feels like Tesla stock is relying a lot on factors that are not on Tesla's control. These factors are like the rising interest rates and like Ark Invest's support. So both of these are out of the control of Tesla and Musk. Ultimately, I do believe these dips are buying opportunities, but for me, it is risky that a lot of the stock's price is dependent on things outside of the company's control. There are fundamental things that also could have caused this drop as well, like Tesla's Bitcoin holdings or other new competitors in the space, but I think the magnitude of the sell-off was increased by these macro factors. Honestly, interest rates are not really that bad now either. They are only around 1.5% on the 10-year bonds, where we're normally seeing around 2%. It is likely that we will see rates increase over time up to 2% and maybe even past 2%. And if rates is what caused Tesla to drop this much, then that is something you have to consider if you are holding Tesla stock. To me personally, I do not buy the idea that rates are the only thing causing Tesla to drop. But if a lot of people believe in that, then that's the truth. So now that I've talked about the macro picture of interest rates and how that's affecting Tesla, now let's head on over to the earnings report to see how Tesla is doing fundamentally as a business. So just to quickly go over Tesla's fundamentals here, this is the most recent quarter here, the last quarter of 2020. And the first thing that we're going to see here is that Tesla's total revenues here, which is this line on the earnings report, we see that it has increased 46% year over year, and that's a pretty nice increase. What's even more impressive to me, however, is that they are able to maintain or even increase slightly their operating margins. We see that the most recent quarter, we were making about 5.4% on every car we sold, whereas last year, we were only making around 4.9%. What this is telling me is that Tesla is still operating efficiently compared to itself. However, we do see that Tesla's operating margins did increase quarter over quarter, but then we kind of plateaued and kind of finished the year downwards in terms of operating margins. So, this is not a deal breaker by any means, but it's something that we should keep an eye on for future quarters. We want to see this operating margins continue to increase. We also do see a pretty big jump in operating expenses year over year. We see this increasing 44%. However, like I said before, this is not exactly what I want to see either, but because the operating margins are still intact, then, it's not the end of the world here if we are increasing operating expenses. But with all that said, I think the big thing that I want to highlight here on the earnings report is Tesla's ginormous pile of cash and cash equivalents. We can see that in the most recent quarter, we have about $20 billion in cash and cash equivalents. This is what Tesla has been building over secondary share offerings that they've announced. The main thing is that Tesla has a bunch of cash to reinvest into its business for years to come. This gives Tesla a bunch of flexibility to continue innovating and continue growing. And honestly, that's what the whole story of Tesla is really about. That's why we give Tesla a good multiple, which we'll talk about later. Also, I do want to note that some of this cash is in Bitcoin too. So, that's a good thing or bad thing, depending on who you ask. What it does is that it basically inherently increases Tesla's risk because it is now tethered to Bitcoin. And because of that, it also fundamentally increases the correlation between Tesla and Bitcoin. Again, it's a good thing or bad thing, depending on who you ask. That's something you have to think about before you invest in Tesla. While we're still talking about Tesla's fundamentals here, I want to point out Tesla's valuation. We are at a $654 billion market cap with a PE of 1,000, and let's say we sell about 500,000 cars in 2020. GM, who has a market cap of 72 billion, PE of 12, sells about 2.5 million cars. Just looking at the numbers here, Tesla's valuation doesn't really make any sense. Why is Tesla selling about 20% of the cars that GM is selling, but Tesla has 10 times the market cap of GM? Is Tesla's growth story worth the extra penny? Again, it's your call here. You're the boss of your own money, and you're the one to decide if you're willing to pay for Tesla's future prospects. To me, I believe in Tesla's long-term growth story, not really for the car per se, but really for the data that they are gathering from autonomous driving and also for the battery. I think that battery technology is Tesla's key to success, because if they can find ways to continue improving battery technology, then the green energy space in general now has a highway to Main Street usage, and that highway goes through Tesla. Also, the data that Tesla is gathering is incredibly important for its long-term story. As hopefully a future data scientist, I know that in order to train your computer models, you need real-life data. In order to train future autonomous driving algorithms, you need the data, and Tesla is probably a few years ahead of a majority of the people at the party at this point. So now that we've talked about Tesla's fundamentals, let's head on over to the trading charts to see if there's a level or two to buy Tesla if we want to buy Tesla. So here we are in Tesla's trading charts, and as you can see, Tesla has had a pretty volatile few days. If we look at the trend line here from our consolidation period in January when we were consolidating between $800 and $900, we began a solid downtrend here. The main point that I want to make in this part of the video is this blue line here, which is the 100-day moving average. Basically, it's an average of the past 100 days of the stock price. And we see that a couple days ago, we actually hit the 100-day moving average, stopped on a dime, and then turned around and ended up positive for the day. If we look at the levels in Tesla here, we see a consolidation level around the $600 to $650 level. If we look at the levels compared to the 100-day moving average, well, look at that. Our 100-day average is right in the middle of our support level in the mid to lower 600s. I think this is the closest support level we have for Tesla stock, and I think that the combination of the support level and the 100-day moving average will provide strong support for the stock. But again, this is just technical indicators. If interest rates keep going up and Jay Powell from the Federal Reserve does not step in with his printing press, then the market could continue to be scared and we could still break this level with conviction. If we break this 100-day moving average and out of this 600 to 650 support level downwards, then I think we're in trouble. And after a couple days, we could be finding ourselves closer to this support level here, down in the $400 to $500 level here. Just to cover the other major indicators here, we are strongly negative on our MACD, which is saying that our momentum is exceptionally weaker than what we are normally seeing in our long-term momentum. Also, if we look at the RSI here, we see that we just almost poked our head into the oversold territory. This could trigger some algorithms to start buying up shares, but again, there are a lot of macro factors influencing Tesla stock right now, and it's risky. But oftentimes during a broad market sell-off, it's the time to lower your cost basis. It could be an opportunity. For me, I've been cautiously expanding my position in some of my high conviction names and picking up some of the stocks that I've wanted for a while. Yes, it is a bit scary to buy when it seems like the sky is falling, but don't worry. Take a breath, clear your head, go to McDonald's and get a Happy Meal with some Pokemon cards in it, and stay the course.